All right, everyone, welcome back. Ready for another deep dive?
Always.
Today, we're tackling the January 29th FOMC press conference with Chair Powell.
Oh, the Fed. Always a fun one.
Right. Trying to figure out what they're really saying about the economy, where things are headed. It's like deciphering ancient hieroglyphics sometimes.
It definitely requires reading between the lines, connecting the dots, seeing those trends that are lurking beneath the surface.
Exactly, and that's why we're here, to break it all down.
And most importantly, to figure out what it means for you. Your financial decisions, your investments, the whole 9 yards.
Couldn't agree more. So Powell kicks things off by calling the U.S. economy strong. He mentions the solid growth we saw in 2024, but admits inflation. Although it's cooling off a bit, it's still hanging around.
Yeah, and that's the tightrope the Fed's walking, right? Trying to tame inflation without sending us into a recession.
A delicate balancing act, for sure. And speaking of balancing, the Fed decided to hold interest rates steady this time around, which is interesting because they just made 3 cuts in a row.
Well, remember, the FOMC sets those short-term interest rates. And what Powell pointed out is that longer-term rates, like the ones affecting mortgages, those have actually been going UP. So they're going to wait and see how these higher borrowing costs impact the economy before making any more moves.
So hitting the pause button on rate cuts for now.
For now, being cautious, relying on the data.
Data dependent, as always. So besides interest rates, what other indicators are they laser focused on?
The labor market is huge E. Powell called it solid and stable, but he also mentioned those low hiring rates and how that could be a problem if layoffs increase.
So that's a potential crack in the foundation they're watching closely.
Exactly. If things start to look shaky in the labor market, the Fed might ease up on policy, even if inflation is still above their target.
So it's this constant juggling act between inflation and employment.
Absolutely.
And then you add in the political pressure.
Yeah.
Powell got grilled about the new administration, especially on interest rates and their diversity initiatives.
Right, and he was very deliberate in emphasizing the Fed's independence. Stated multiple times that their decisions are based purely on data, not politics.
A subtle but important message to send.
Absolutely. Underlining their credibility, their objectivity.
Okay, so we've got inflation, interest rates, the labor market, political pressure. It's a lot to keep track of.
And as if that wasn't enough, we've got this looming threat of new tariffs. Adds another layer of uncertainty to the whole economic picture.
Trade wars. Never a good sign. But on a lighter note, remember that AI-driven stock market sell-off we saw recently? Powell basically shrugged it off.
Oh yeah, that algorithmic roller coaster. Powell basically said the Fed doesn't sweat the short-term market volatility. They're focused on the bigger picture, the broader financial conditions.
So we shouldn't panic about every little dip and spike in the market.
Precisely. Wall Street tends to freak out over headlines, but the Fed is playing the long game.
That's reassuring. Now, this next one threw me for a loop. Mortgage rates have actually gone UP, even though the Fed just cut rates. What gives?
It seems counterintuitive, right? But Powell suggested that other factors are at play, like inflation expectations, global demand for U.S. debt. Those things can push mortgage rates higher, regardless of what the Fed does with short-term rates.
So maybe the housing market isn't the slam dunk it once was.
Potentially. There were already signs of things cooling down.
This is where it gets really interesting, right? Powell kept bringing up uncertainty, especially with the new administration's policies still taking shape.
Right. A lot of unknowns out there. And that means...
That means we need to buckle up because things could get a little bumpy.
Exactly. The Fed's in wait-and-see mode, gathering data, preparing for any and all scenarios.
Which means
we could see some volatile swings and unpredictable policy shifts in the months to come. So when Powell keeps saying wait and see, I think it's important to dig into what exactly they're watching for and how that might affect, what you and I do with our money.
Absolutely. It's like they're playing this high-stakes game of economic chess, and we're trying to figure out their next move. What pieces are they focused on right now?
One thing that really stood out to me was Powell mentioning the Fed's 5-year review of their monetary policy framework.
Okay, now that sounds intimidating.
Yeah.
Can you break that down for us regular folks? What does that even mean, monetary policy framework?
Well, it's basically their playbook for managing the economy. It includes stuff like their inflation target, which is still 2%, by the way, and their approach to setting interest rates. They're open to tweaking things, but they also stress the importance of keeping things stable and predictable.
So no sudden moves, which I guess is good for investors. But sticking to that 2% inflation target when prices have been jumping all over the place, that feels a little ambitious, right?
It does, doesn't it? Powell admitted that inflation's been running hot, but he argued that the 2% target has worked well for them over the long haul and helps keep expectations in check.
So changing the target now would be like waving a white flag.
Exactly. It would signal that they've lost control, which would totally undermine confidence.
Right. Not a good look. Speaking of confidence, how did Powell handle those questions about the Fed's independence, with all the pressure coming from the new administration?
He was rock solid on that point. Emphasized over and over that the Fed operates based on data, not politics. Their decisions are all about economic analysis, not what's politically expedient.
Like a doctor prescribing medication based on your symptoms, not what the insurance company wants them to prescribe.
Perfect analogy. You want someone making decisions based on what's best, not based on some external agenda.
Exactly. Okay, so we've got inflation, interest rates, the job market, political pressure, and then to top it all off, we've got those potential tariffs looming on the horizon.
Ugh, those trade wars. Haven't we learned our lesson already?
Tell me about it.
Powell did acknowledge that trade tensions can be a real drag, especially for businesses looking to invest. But he also said it's tough to predict exactly what the impact will be. Depends on a lot of factors, like which goods get hit and for how long.
So, more uncertainty to deal with. Fun times. But how could those tariffs affect, everyday people like us?
It's hard to say for sure, but Powell mentioned that it could mean higher prices for some things. Tariffs are basically taxes on imports, and those costs often get passed down to us, the consumers.
So get ready to shell out more cash for some of your favorite stuff.
Yeah, potentially. And inflation in general is already squeezing people, especially those who are just scraping by.
Right, it's hitting the most vulnerable the hardest. Did Powell address that at all?
He did. He admitted that rising prices are putting a strain on household budgets, even though the overall job market is strong.
It's a tough situation for a lot of families. Okay, so we've covered inflation, interest rates, the labor market, political pressure, tariffs. Anything else from Powell's press conference that stuck with you?
Actually, yeah. I wanted to touch on that AI-driven stock market sell-off we saw recently. When everything went haywire for a few days?
Oh yeah, like a financial flash mob. It was a little unnerving, to be honest. But I thought the Fed was supposed to ignore those short-term market swings.
Right. They're focused on the big picture, not those day-to-day fluctuations. And that's exactly what Powell emphasized. He basically said, we're not going to react to every little blip in the market. We're looking at the broader financial conditions.
So no need to panic when the market takes a nosedive.
Exactly. The Fed certainly isn't.
That makes sense. But what are those broader financial conditions they're so focused on?
Things like asset prices, credit conditions, the overall stability of the financial system. Powell did acknowledge that asset prices are high, but he also pointed to how resilient households and businesses have been and how strong the banks are.
So no major warning signs there, at least for now. What about the housing market? We talked about how mortgage rates have been climbing even though the Fed's been cutting rates. Seems like a contradiction.
It does, but Powell explained that it's probably because of other things happening in the economy, like those inflation expectations and the global demand for U.S. debt. He even suggested that those higher mortgage rates could slow things down in the housing market, which was already starting to cool off after all that crazy buying we saw.
So the housing boom might be fizzling out.
Maybe. And just to throw one more thing into the mix. Remember we were talking about crypto?
Oh yeah, the digital Wild West. Exciting, but risky. Did Powell actually address that?
He did. He was asked about cryptocurrencies and the risks they pose, both for the financial system as a whole and for individual investors.
So what's the Fed's take on all this? Are they going to try to rein it in?
Well, Powell stressed that the Fed's main focus is on banks and making sure the whole financial system is stable. They don't want to stifle innovation, but they do want to make sure banks that are dabbling in crypto are managing the risks responsibly.
Makes sense. Crypto is still pretty new and unpredictable, so it's natural for the Fed to be cautious. But what about regular people who are investing in crypto? Any advice for them?
Powell basically said that it's crucial for people to understand the risks involved with any investment, and that includes crypto. He also said he's in favor of more regulation in the crypto world, which he thinks would help protect investors.
More transparency and consumer protection would definitely be a good thing. It feels like anything goes in crypto right now.
It can feel that way. But it's also important to remember that innovation is what drives our economy, and the Fed doesn't want to squash that. It's all about finding that balance between encouraging new ideas and keeping the system safe.
Right, striking that balance. Okay, I think we've covered pretty much everything from Powell's press conference.
We've been through a lot. Inflation, interest rates, the job market, political pressure, tariffs, the Fed's commitment to staying independent, even a little bit of crypto talk.
It's like we just aced an economics final.
Exactly.
And that's why I love doing this deep dive with you. You make these complicated topics so clear and interesting.
Well, thanks. I enjoy it too. And that's what we're all about, helping you stay informed and navigate this crazy economic world we live in.
So before we wrap up, any last words of wisdom for our listeners? What should they be watching out for in the coming months?
Well, as Powell said, uncertainty is the biggest factor right now. The Fed's in wait-and-see mode, gathering information and preparing for all sorts of possibilities.
Okay, so we've been through a lot. Feels like Powell's taken us on a wild ride through the economy with all this talk about inflation and interest rates and even crypto.
It has been a bit of a whirlwind, hasn't it? But, that's how the economy works. Always changing, always throwing new curveballs our way. Speaking of which, we were talking about crypto earlier.
Yeah, let's dive back into that digital world for a minute. You mentioned Powell getting questions about the risks of crypto, but did he say anything about the potential upsides?
He did. He acknowledged those risks, especially for people who maybe don't fully grasp how volatile and complex these assets can be. But he also sees the potential for innovation in the crypto space. Even hinted at the possibility of a central bank digital currency, a CBDC, someday.
A digital dollar. That sounds straight out of sci-fi. What would that even look like?
It's still early days, just an idea at this point. But basically, a CBDC would be like a digital version of our regular currency, issued and backed by the Federal Reserve. Imagine dollar bills that only exist online.
So instead of carrying cash or using credit cards, we can just pay for stuff directly with digital dollars from the Fed.
That's the idea. It's a fascinating concept. Could have huge implications, both good and bad. For example, it might help people who don't have access to traditional banks, bring more people into the financial system. But it also raises concerns about privacy and the government potentially having too much control over our money.
Wow, a lot to consider there. It sounds like the Fed's dipping their toes into this new world, cautiously, recognizing the potential but also the dangers.
Exactly. And that's really the theme that runs through Powell's whole press conference. Finding that balance, encouraging innovation, managing risk, making sure the economy is on solid ground.
A tricky balancing act, for sure. Well, I feel like we've learned a ton today, not just about where the economy stands right now, but also how the Fed operates, what their priorities are in this crazy financial world we live in.
I agree. And remember, the big takeaway is that the Fed makes its decisions based on data, not politics. And they're committed to staying independent. They're keeping a close eye on things, and they'll adjust course as needed to hit those goals of stable prices and full employment.
It sounds like we're in good hands, even if it's going to be a bit of a bumpy ride sometimes. So to everyone listening, stay tuned, stay curious, and keep those questions coming. We'll be here to break it all down, decipher the Fed speak, and give you the info you need to make smart decisions.
And don't forget, knowledge is power, especially when it comes to your finances.
Thanks for joining us for this deep dive into the world of economics and finance. Until next time, stay curious and invest wisely.